In 2026, I plan on competing and winning the US Investing Championship. And I just found this video I want to watch with you today called I Studied 5 Years of US Investing Champions. Here's their secret playbook. So I'll be taking notes and I want you to do the same so we can both win the US Investing Championship together.
Is trading and investing that simple how these US investing champions or super traders make it look like? Well, turns out it is. And we normal traders are just fucking complicating it. I studied 5 years of US investing champions, and the thing is, every one of them uses the same playbook. Forget the fancy indicators, the complicated strategies, the algorithm bots, yada yada yada. In this video, we are going to see the exact method on what these guys are using. And the thing is, it is so simple. I read the statements, I saw all the interviews, I dissected all the charts of these awesome traders, and now I'm giving you the exact playbook. We're going to study traders like Oliver Kell, Mark Minervini, J. Law, Tanmay Khandelwal, Govardhan Gajala, George Kajak, who went on to achieve some mammoth-sized returns in the US investing championships. So let's go. First comes.
Here we go. So before we get into that, I forgot that I need to do the giveaway tool because we're playing Big Money Bingo. This is the Big Money Bingo live stream. The only way you can win Big Money Bingo is by typing #outlier in the chat live, just like Alan just did, And we will also have the, hold tight, the Wheel of Fortune giveaway to see what you're going to win when you win. It's going to be very exciting. So be sure you type in #outlier in the chat so you can win bingo, because we're giving away merch now. It's going to be super fun. So let's listen to the cheat codes, the secret playbook for the US Investing Champions.
Their stock selection method. Turns out these guys never ever pick cheap stocks. Every investing.
No, hold on. They never pick cheap stocks. They're probably snobs like myself. Maybe he'll tell us their minimum price threshold, but they are cheap for a reason. Penny stocks are nearly worthless for a reason. Okay, they are not good companies. They are not stocks that you want to own, right? Okay, I'm very excited about this. We're off to a great start.
Champion from Mark Minervini to Tanmay Khandelwal. These guys, what they're screening for in a stock is the earnings momentum, the sales growth, and sector leadership.
Okay, we're going to give you strong breadth because of the sector. We're going to give you, I swear he said momentum. Yeah, there's momentum right there. Okay. All right. Now, sales growth, we all know that fundamentals are absolutely meaningless, right? Fundamentals that come out 4 times a year. What about the other 99% of the time, right? That doesn't matter, right? The sector leadership, earnings momentum, I can't really get behind that either, but we can see the momentum in the price. That's what I'm talking about.
They want to pick the market leaders and not the laggards. And most of the stock selection is rooted in the CAN SLIM strategy by William O'Neill. Now, what the hell is CAN SLIM strategy? Well, each letter in the CAN SLIM stands for a certain criteria. The C stands for current earnings. Here the traders.
Okay, very fair point here. This is what they teach in the book, How to Make Money in Stocks, right? But at the very last letter is M, and that's for the market. And I worked personally with Mark Minervini, one of these champions that he's going to talk about here. One of the things that he talked about in a recent video that we also watched on this channel was an hour's worth of nothing but charting. So basically, you can have all these reasons why a stock is great. This is where I'm going with this. You can have all these justifications as to why the story is great. You can have a reason why everything is amazing. But if the price is not going up, that will end the conversation. It will absolutely stop the conversation. So as we go through here, remember, and I'm not blaming him, the Mint Code at all. Please go subscribe to the Mint Code channel. What I'm saying here is everybody who is coming up and using the CAN SLIM, they're coming up with reasons and justifications as to why it's a good stock. And then once the market confirms their thesis, that's when they get in. That's what we're trying to talk about here. I'm trying to save you time. You don't have to go through all that if you can see that the stock is moving in the direction already.
Are looking for quarterly earnings share, EPS growth of plus 25% compared to the same quarter the previous year. What this does is a strong earnings signal a strong demand in the stock. Then comes A, the annual earnings. The annual EPS also should be growing. What the annual EPS does, it shows consistent growth, which in turn shows a sustainable business model. The N stands for new products, services, or highs. A company should have something new fueling the growth, like a product, service, management, or entry into a new market. The third is supply and demand. Few shares outstanding plus higher demand equals strong price moves. Look for stocks with high trading volumes on their up days because that indirectly indicates institutional buying. The L stands for leaders or laggards. Again, as mentioned before, they prefer buying the leaders and not the laggards. And the RS, which is the relative strength. Don't confuse this with RSI, which is the relative strength index. This is a good metric to have while judging the leaders. So what is RS? Simply put, it is an indicator which gives you an idea of the stock, if the stock is actually beating the index or falling behind it. And RSI, well, you already know that. It's overbought or oversold. Now, I stands for institutional ownership. Strong ownerships by mutual funds, hedge funds, etc.
This is a big deal. This is a big deal. I saw somebody posted it in the Discord the other day, and it was a brilliant demonstration of what that means. Is there was a scene in Star Wars where Han Solo is flying the Millennium Falcon, and he's in a minefield, and he's hiding from the Empire, and he parks the Millennium Falcon on an asteroid. Right? Imagine the institutional ownership is an asteroid field, an asteroid belt, right? All of this money is heading in one direction. All you have to do is get yourself in that minefield and then follow along with them, and it will take care of itself, right? Institutional ownership has way more money than you or I will ever have combined. They will move the market. All you have to do is spot when that's happening, see where the money is going, and then follow along with that. I thought it was a brilliant, and I would love to give credit to who it was. I don't remember who posted it, but really solid analogy for what we're trying to do with institutional ownership.
Again, proves strength of the stock. Again, it differs as well. Too little ownership equals too less demand for the stock, and too much of ownership equals no room to grow for the stock. So balance out here is the key. And M stands for market direction, because even the
Again, everything builds to market direction. If it is going with the market, if the market's pushing higher, everything working together, all of this will help build your thesis, build your story around why it's the best stock in the world to buy. And the last thing is it must be going in the right direction. You must be following the trend. I'll give you following the trend IC. I'll give you that one.
the best stocks will fail in weak markets. I've had the worst experience this year. Use charts of major indices. It could be S&P 500, NASDAQ. It could be Nifty 50 in Indian markets. It could be anything. Just charts of the major indices to confirm your uptrend before buying. And the second thing is...
Okay. Confirm your uptrend. Let's see if don't predict your... Let me know if I missed anything on here. How probably says how to win. Okay. I don't think I missed anything yet.
What time frame or common patterns are these guys using? Believe it or not, these champions are using the most simplest patterns. Breakout from consolidations, base formations.
Okay, now here's something that Chris really struggles with. When it comes to the market, Chris really struggles with coming up with patterns. The reason that I struggle with patterns is that they're super subjective. Now, for these couple examples here, right? For this one, maybe this makes total sense to be a cup and handle. I don't know. Maybe this makes total sense for these different bases. I don't know. Maybe this makes total sense for a breakout. I don't know. But what I do know is that the math will never lie. The math was a constant given to us by God. And we can tell when a stock is trending higher or lower based on 3 moving averages. When the 10 is over the 20, price is over the 50, that is what we call our outlier trend template. When the 10 is under the 20 and price is under the 50, that is also the outlier trend template, but in a bearish fashion. Okay. So you can apply whatever works best for you. But for me personally, I feel that drawing patterns is ultra subjective. So I like to use the moving averages. But at the end of the day, when are you going to get paid? Do you think the moving averages are moving up here or they're moving down here? Right? I can guarantee you the moving averages, the outlier trend template is moving with you on this side. I can guarantee you the moving averages that are math-based are moving with you on this side. I can guarantee you the moving averages after this breakout here. Like imagine that this is a breakout. Let me see if I can draw a box here. And listen, I know I'm not going to do this right, and I'm not trying to. But imagine that this is the box, and that's the breakout here. The moving averages are moving with you. Okay. The goal is to have more money in your account. The other goal is to make sure you are in a trending market. How you determine that trending market is completely up to you. Completely up to you. But I personally like the moving averages because they are math based.
And cup and handle patterns. These patterns, these common patterns are literally their bread and butter. They live on breakout patterns from tight bases. Oliver Kell, for example, uses multiple time frames from 5 minutes all the way to weekly and monthly charts. So he can confirm whether the structure is strong on higher time frames and his triggers are precise on the lower ones. J-Law uses moving averages, believe it or not. He'll use
There you go. We'll give you moving averages. Finally. B3 breakout. Oh, he did say breakout. You're right.
a 10, 20, 50 everywhere, and sometimes even the 63, the 150, and the 250 dailies, which line up with the quarter 30 week or 50 week of the hidden confluences. And the patterns they're obsessing over: volume dry ups before breakouts, prices respecting these moving averages, and the classic retail.
Okay, let's pop into these charts real quick. So I'm not a big volume trader. I'm really not. I really don't even pay attention to what's going on down here. And let me give you a couple examples why, right? If we're looking at big volume right here, we had big volume right here and it was going down. If we're looking at big volume right here, we had big volume right here as it's going up. Does that really tell us anything if big volume is happening, right? Big volume on this candle right here. Sure. And then it's going sideways and it went slightly more sideways, slightly higher sideways, right? Big volume happening right down here as it's selling off. Big volume happening right here as it's going back. And really what happened? Literally nothing. Zero price change. Yet all this volume came through. Right? It doesn't really, I don't jive with it. I don't see it. I don't understand it. And that's okay. Right? I've been doing this for 16 years. You're going to find things you work with, you jive with, that totally clicks with you. Or you're going to find things that to you may not fit your trading plan at all. And that doesn't make a difference if at the end of the day you have figured out a profitable way to trade, and you do that by managing how big your wins are and how small your losers are, and of course trying to maximize your winners and minimize your losers, right? Cutting those losers short, letting your winners run out of control. And to Carol's point, right, volume doesn't show the trend, right? It doesn't show the trend. So we can have these big volume spikes, we can have small volume spikes, and honestly it doesn't really do anything because you're not going to get paid on volume. You're not going to get paid on volume. You're not going to get paid on fundamentals. You're only going to get paid on when the price is moving up. It's just a fact. By the way, if you want to win bingo, like David wants to win bingo, you got to type #outlier. And Gas Trader says the same thing. I'm glad I'm not the only one. Dude, I get it. Mark wants to win bingo. Absolutely. Gas Trader wants to win bingo, but you got to type it right. That won't count. Let's get back over to it.
Test and reclaim of breakout levels with MA confluence underneath. And this simple thing can be deadly effective. The third thing is, what indicators are these guys using? Turns out champions are really, really light on indicators. Most of them just stick to the basics: the price, volume, and moving averages.
How about that? Price, we talk about constantly, right? I have 3 moving averages on my chart. Now, if they knew about order blocks, they would definitely add them to their charts because look at how well this used as support. Tell me order blocks don't work. Look at all that support right there, right? Anyway, you don't have to do extreme indicators. You don't need 57 indicators, not at all. But you do need to be market aware, right? Market aware meaning which way is the trend going? Market aware meaning is there support? Is there resistance, right? AMD, tell me that order blocks don't work when the very first time it came up into this area, it hit huge overhead resistance, right? This is being market aware. 3 moving averages and order blocks. And you can make your charts look exactly the same as mine for free. Get a free trading view plan, get the free deep thought indicator that we offer through our Discord, and your charts will look exactly the same as mine. It makes it so simple. But additionally, right, Outlier makes things a lot easier because now you can see under the hood in the market. For example, market breadth, right? Seeing how many buy signals we have versus uptrends and downtrends, right? This is the kind of stuff that you won't be able to see just on price, okay? The fear and greed of every stock. Is it getting super greedy, right? We can see stocks that Let's go to, let's just pick one at random. This is literally one at random. I haven't looked at it ahead of time. We can see stocks that have incredibly high greed values and go nowhere, right? Right here, right? We had a greed value of 75 and it went nowhere, nowhere since July. Now we're a month later and the price is exactly the same on AOS. So you can see why the greed has been draining out of this is because, you know what? People were greedy as it was pushing up, but now it's going sideways. Even though the moving averages are still pushing up, the number of people who are excited about the stock is going down. Pretty interesting, right?
Govind and Oliver always hammer at the same point that you will see volume contraction before your breakouts. And that is one of the biggest tell.
Shane, this is such a wonderful question. I'm really glad you asked it. Is there a huge difference between the 9 EMA or the 10 EMA? So, of course, there's not, right? The only difference is one period over time. But if we added in the 9 EMA, it would look basically the same as the 10 EMA. Now, if you came up with different EMAs, so I use the 10, I use the 20, and I use the 50. The 10 is a 2-week time frame. The 20 is a 4-week time frame. The 50 is a 10-week time frame, right? So those are nice round numbers, 10, 20, 50. 2 weeks, 4 weeks, 10 weeks. Nice round numbers. We're trying to make our trading plan a phrase I like to call anti-fragile. And in fact, I've been using it a lot in all of our back testing. I want to make this anti-fragile, meaning if it only works when the 9 EMA is crossed, it doesn't work at all. In the military, they have a saying that 2 is 1 and 1 is none, right? That is an anti-fragile situation versus a fragile situation, right? In an anti-fragile situation, you're good, right? You can handle movements that are unexpected. You can handle differences in what's going on in the market. In a fragile situation, it only works in this one instance. And if it only works in this one instance, it never works. So the 10 EMA is a nice solid round number that you can apply to basically all the time. The 9 EMA, if that works for you and it works in all circumstances, is great. But to have a very fine tooth comb, a very detailed level of what you need on your chart, you're basically setting yourself up to find a trade that might happen once a year versus a trade that may happen once a week. Does that make sense? It's a fantastic question, Shane. Really appreciate you asking that.
That the stock is going to just surge in momentum. J-Law out here reminds us that moving averages are just one of his edges in his strategy and never relies completely on them. So when it comes to entries, it's all about precision and pass. Govind keeps it super simple.
Okay, talking about precision, I'm going to give you consistency and discipline because you're not going to get precision without that. I'm also going to give you following your plan because you must have a plan in place in order to have that precision.
When the stock moves his way, the buy price automatically becomes a stop loss. There's no hesitation over there. Oliver looks for clean
Stop loss. I heard stop loss. There we go.
base breakout patterns or the pullbacks towards the 10 or 20 EMA and with the risk just tucked underneath it. This way his losses remain tiny and the rewards can be big. And J-Law, he only trades when multiple edges line up in his setup, like the breakout retest sitting right on the trend line support with the 20 and the 50 moving averages underneath. That's where he caught big runs in stock names like the SMCI and the Palantir. Also, he sells into strength, and if the support breaks, he's out. Now, what risk rules do these guys use?
I love to sell into strength, by the way. That's a difficult thing to do because you need to decide how much strength you're willing to give up in order to sell into strength. I'll give you a great example on Robinhood. Now, Robinhood, I traded this in May. I made ungodly money in May, right? The stock went up 15% in the span of 3 days. Two days. Three candles. In 3 candles, it went up 15%. I got in, I got out, and I made 96% on my options in 3 days. It was amazing. I sold into strength because that was my exit signal. What did it do? It went on for ages. So some of you would look at this and say, well, Chris, you blew it. You're so stupid. I can't believe that you gave up all of those gains. What an idiot. Do you even trade, bro? And I would tell you, I followed my plan to a T. I knew exactly where I was going to get in, exactly where I was going to get out. And you know what? It continued on and it did what it was going to do. I can't change that. I cannot see the future. I can only see what was presented to me. So if we do a replay and we start on this candle right here, right? Remember, we cannot see the future. And we push start. and we watch as each candle develops, and you see your trading plan coming to fruition, and you say, okay, I got everything I need to see. I sold into strength because I followed my trading plan. It did what it did. It did what it was going to do. Right? I can't control that because I was already out and I was already on to the next trade. What happened to let winners ride? Dude, you can do that, right? I think you really need to figure out what metric you want to cover to sell into strength. For me, I was using the fear and greed heat map in Outlier. And in fact, let's go to that real quick. I was using the fear and greed heat map because I want to see it rising. And that was June. I have to scoot this over a little bit. Here, this is where I got in. And look at how fast it got really, really greedy, right? So I said my exit signal was going to be 69 on the heat map. I even wrote it on the chart so I would hold myself accountable. It went up very fast and it hit 82, 83, just out of nowhere. Boom, 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 right? Following your plan, knowing where you're going to get out is the most important thing. And the reason that I say don't stress on it is because we have no idea, right? Remember, we cannot see the future. It is an impossibility to see the future. All we can do is trade what is in front of us. And if you have a plan, and if you treat your account as if you were a fund manager is not going to look at this and he's not going to be like, oh no, I can't believe I missed out on all these gains. No, fund manager is going to look at this like you are looking at this and you're going to say, I followed my plan, did what I was going to do, and I moved on. So I don't ever want you to have regrets in trades. And you won't have regrets in trades if you just follow your plan.
And what is their stop loss? For champions, cutting losses is non-negotiable. They usually slash their losses at, and remember this number, at around the range of 5 to 8%. You wanted a holy grail? This is your holy grail. Just keep your stop losses really, really small. Like Govind Gajala's breakthrough, what he said in his
Yeah, I'll give you exit signal. We already had cut your losers short, use a stop loss. That's so important.
interviews literally came from that when his stock starts moving into his direction, he just makes the buy price his stop without any hesitation, without any wiggle room. And Tanmay, his simple rule is on any single trade, never risk more than 1% of your capital. Now let's talk about sizing and capital allocation. So when it comes to sizing for these guys, it's all about time and discipline. JLaw, for example, only scales up when multiple edges line up and when the market itself is in sync. He's big on using profits to fund his own risk and never putting his capital in danger when he's out of sync. Oliver, for example, he swings hard when he sees conviction in setups like the base breaks or the moving averages squeezes. But he always keeps his 10 EMA and the 20 EMA police his risk. And Govind only started sizing up when he had a clear, repeatable playbook. He has literally screenshotted all the charts which he's played on just to build that playbook. Now let's talk about the sectors which these guys play in. Now champions, they don't stick to pet sectors, the favorite industries that they like to play in. They actually look at the theme, they study the theme and rotate it accordingly. Here's a screenshot of theme examples from Oliver Kell's book, Victory in the Stock Market. Similarly, George Kajak also did the same thing, riding the trend and stepping aside when things turned. Tanmay does it too. He's constantly re-evaluating. And if the valuation thesis feels off, he simply exists, even if the price feels right. The lesson out here is to treat it like a business and not like a hobby. Now I get the reasons for my subpar returns. Now, this one is my personal favorite. How many number of positions do these guys hold at one particular time? Because I always used to hold around 100, 200, sometimes 300 stocks, and just look at that jungle of.
Could you imagine holding 100 to 300 stocks? Good gravy. This is something I'm hugely, hugely, hugely against. Now, always remember, the only bit of luck, I think, in my opinion, in the market that will change everything for you is which stocks you pick. Because let's say, for example, today we have, I think it was 400 something buy signals. What's going on over here? Hold tight. We kind of froze. 400 something buy signals. There's no possible way you can take 400 something buy signals, right? Even if you tried to take 400 buy signals, you would spend the entirety of the day. I don't know what's happening. Clearly my computer's frozen. There we go. You would spend the entirety of the day clicking buy, right? An unbelievable 412 buy signals today. You're going to have to make some choices, right? Unfortunately, it's very unlikely you're going to buy all 412 at the same time. Now, of those choices, maybe you use a screener, maybe you have some other filtering criteria and you get it down to 50. Still, 50 is a monster amount of trades to put on. I like to say about 10, 10 at the most. I mean, I think over the last 2 years, 10 or 11 is the very most I'll have on at a single time. And even that is a frickload of work to manage. Yeah, Minervini uses 5 to 7. Exactly. And if somebody who has won the US Investing Championship twice has 5 to 7 trades, why do you feel, and I'm not calling anybody out directly, I'm certainly not the guy who made this video, the mint code. Why do you feel that having 100 to 300 trades in your account is the right thing to do? That is an overwhelming amount of information to have to keep up with on a daily basis. And I can guarantee you, if you had 100 stocks in your account, you're missing your exit signals. You're missing your trailing stops. You're missing your selling to strength points. You're not going to be able to keep up with it. So you've got to filter it down. Now, granted, of the 412, some of these are going to be huge winners. Some of them are going to be small winners. Some of them are going to be break even. Some of them are going to be small losses. You can't help that. All you can do is have no expectations on the trade, follow your plan, and let the trade go where it's going to go. All right, let's continue on.
Stocks and think to myself, what am I doing? But the common thing between these guys is their approach to less is more. And the truth is, these champions do not juggle in 50 stocks. They focus on 5 to 8 killers. At the max, they would probably hold 12. That's it. But of course,
That's exactly my wheelhouse right there. 5 to 12 at the max.
the number of trades differ. They're entering in and out of these really good stocks which they have selected. Mark Minervini, for example, I think it's around 150 to 200 trades
That's for the year, not at one time.
per year. Oliver Kell, who did 900% return, makes about 200 to 250 trades in a year. He pyramided quickly into big winners like Tesla and cut losers out quickly, which adds to his trade count. J-Law again is more selective. It's about 100 to 150 trades per year. George Kajak around 100 trades. So Govind Kajala is a day trader and he trades 1 to 3 stocks per day, which stacks up his trades up to 200 to around 500 trades per year. And Tanmay Khandelwal, he uses a long-term approach, so it's around 60 to 100 trades per year, which he's willing to hold for around 6 to 8 months. The key takeaway out here is capital is finite. With only 5 to 8 slots, every position has to earn its seat. If a new A+ setup arrives, they'll just cut the Lagarde, even if it's not losing. And this, they do it to free up their mental space and their cash.
By the way, I see you guys trying to work yourself into a bingo. I see it. And I might just give it to you.
Premature exits, they aren't a mistake. They're capital rotations. Remember this very, very well. You'd rather move in with a stock breaking with volume than, babysit a stock that is moving sideways. So defense always comes first. Losers always get sold quick. And even the mediocre winners can get dumped if something really good shows up. So what is the common DNA, what these champions share? Here's what really sets them apart. They go for leaders with the strongest earning powers in the strongest sectors. They buy the base,
Right. You want to find the stocks that are moving the best. You want to find the strongest stocks. In my opinion, don't look at the fundamentals. Focus on the price because that's the only thing you're going to get paid on. Strongest stocks and price. Strongest sectors in a strong market. That is what you're looking for. I don't know. I'm not sure if I want to give you guys 01. I don't think he said high probability setups, Manny. I don't think he did. We'll have to see. Mitch is being smart because he wants to win big money bingo. If you haven't typed in #outlier, you probably should, because we're going to give away some cool stuff here in a couple minutes. Did he say it, Manny? Did he though? Senior Wahoo Art says I won. Did he say higher highs? I'll give you higher highs. I'll give you higher highs. I feel like he might have said higher highs. I don't know, Manny. Jaime's also saying yes. 01 and 03 both really fine. Since Jaime is agreeing with you, what was it? 01 and G3. Oh man, this is not good for me. This is not good for me because we already have double bingo right there. Row 1 and row 3. And we're so close to potential triple bingo. Potential triple bingo. If you haven't typed in #outlier in chat, you can't win bingo. I'm just saying.
the breakout, and then they ride the 10 or the 20 EMA, always looking for that dry up in volume before the big expansions. Risk management is everything. Tight, very, very tight stop losses. And their charts are super simple. Price, volume, and moving averages. They'll use multiple time frames, they'll use the MA confluences as supporting edges, but never as their main signal. And the obsession, it's in the review. Screenshots, post-mortems, written playbooks, fewer trades, but of course, way better trades. So yeah, the secret isn't in some magic indicator, in some holy grail strategy.
Oh wait, I missed column G. It's a triple bingo. Oh man, thanks Chuck. I totally missed it. Triple bingo.
It's simply repeatable pattern recognition, tight risk, edge stacking, and lots of humility, especially when things are going sideways or not in your favor. So if you guys want more, comment which champion I should deep dive next. I'll break
deep dive this champion. 2026's winner of the options and enhanced growth division right here, Christopher M. Ewell, CMA, two-time top 100 people in finance, mentored by 5 of the market wizards. Definitely will be the 2026, and by all means, the Mint code. I will very gladly grant you an interview. You and me, my dude. This is gonna be great. Speaking of things that are great, it is great to give away 3 bingos today. 3 bingos today. So you have just another moment while I pull up the shop real quick. Shop.fourthwall.outlier.com. All that bologna sandwich. Here we go. Looking at all the cool stuff that we have on Outlier. Actually 3 somebodies are going to win. I'm so excited. Are you guys excited as I am excited? All right. The first winner of the day. Okay, I see people throwing Outlier in the chat. Hurry. We got to get to 202. Once we get to 202, then I'll draw. We're at 200. Come on. Rob, where you been, dude? Glad you're here. Be the casino. All right, we need one more person to get 202. Art needs a coffee mug. Attila, there we go. I need one more person to put #Outlier in the chat. One more. There we go. 204. Excellent. Okay, who's going to be first? First winner is, it's still going up as we're typing, so we're good. Keep typing. First winner is going to be Julianne Hatham. Hatham? Either way, Julianne, you are our first winner. I'm going to start drafting my email to April because she's going to send you guys everything. So Julianne is the first winner. And let's go see what Julianne wins. Hold tight real quick. I got to start drafting my email to April. Otherwise, I will forget. Julianne wins. Let's spin the wheel. The wheel of fortune is going to be Julianne wins $10 Outlier merch credit. So congratulations to you, Julian. You get $10 off anything in the store that you want. Outstanding work, Julianne. All right, who's going to be our next winner? We're up to 209. Draw again. Manny says, a new Lambo. All right, second winner of the day is definitely not going to be Outlier. Francis N is our second winner of the day. Francis, let's see what Francis has won today. I think this is so much more fun than just giving away $10 Amazon gift cards. If you think this is way more fun, type #Outlier in the chat. You see what I'm trying to do there? I'm trying to get you to type #Outlier. All right, draw again. Oh, wait a minute, wait. Okay, we're going to see who that winner is in just a moment. Look at these ads. Let's go. All right. Hang on a second. We got to see who's going to be the winner. And in just a moment, we're going to see one other winner. All right, so Francis wins a Outlier U koozie. I have one of those handy right here. So Francis wins an Outlier U koozie, just like I have right here. Hold tight. Francis wins an Outlier U koozie. You guys realize that when we go back over to that tab, we're going to see who the next winner is. You realize we're going to see who the next winner is. I know, right? Chris's ads are sick. Chris's ads are on point. All right, you ready? Who's going to be the next winner? Matthew Nolan. What's up, dude? Matt, I swear you said you were here earlier in the live stream. So congratulations to Matt. Matt is the third winner. And what did Matt win? Let's see, what did Matt win? Matt wins an Outlier flag hat, just like I got right here. So Matt and I are going to have matching hats. So congratulations to you, Matt. you just win yourself an outlier flag hat, not an outlier unit hat, an outlier flag hat for Matt. So let me type this in real quick to April. All right, so congratulations to Julianne, to Francis. Okay, Julianne won the $10 merch credit. Francis won an outlier U koozie, and Matthew won an outlier flag hat. So congratulations to all of our winners. I am so stoked that you were able to win. And of course, this is the greatest channel on the planet. If it's not, you are definitely in the right place. But the way to claim your prize, I should tell you this before we head out. The way to claim your prize is by shooting us an email, support@outlier.com. We won't be able to send that to you unless you give us your name and address. And so we will take care of the rest from then. All right. So thank you all so much for coming today. If you're ready to save time, make money, and start winning with less risk, click one of these two videos, and we will talk soon.